Warren Buffett, one of the most successful investors of all time, has become almost as well known for his unique personality and surprising personal stories as for his financial acumen. After the stock market crash of 1987, Buffett began buying shares of Coca-Cola, investing about $1 billion to acquire a significant portion of the company. He recognized Coca-Cola's enduring brand value and global appeal, and his stake in the beverage giant has grown significantly over the decades, representing one of his most lucrative investments. Buffett stepped in during the salad oil scandal of the early 1960s when American Express shares plummeted. He bought a 5% stake in the company for $20 million. His insight into the company's core credit card business and its brand resilience led to a rebound in value. This investment has grown many times over and remains a cornerstone in Berkshire Hathaway's portfolio. Buffett's initial investment in Geico dates back to the 1950s when he started buying shares in the insurer. By the mid-1970s, he had significantly increased Berkshire Hathaway's stake. By 1996, Berkshire Hathaway had acquired the entire company. Geico's low-cost insurance model proved extremely successful, and it has been a substantial contributor to Berkshire's earnings. In 1972, Berkshire acquired See's Candies for $25 million. It was a classic Buffett move, focusing on a company with a beloved product and a strong consumer loyalty. The investment has paid off many times over, with the initial investment earning Berkshire more than $2 billion. In 2009, during the height of the economic crisis, Buffett made a bet on the American economy by purchasing the Burlington Northern Santa Fe Railway for $34 billion. It was one of Berkshire Hathaway's biggest acquisitions and has proved to be extremely profitable as the American economy recovered and the demand for transportation of goods across the country increased. Buffett traditionally avoided technology stocks, preferring businesses within his circle of competence. However, in 2016, Berkshire Hathaway began buying shares of Apple Inc., eventually becoming one of its largest shareholders. This investment diverged from his usual practice, but he saw value in Apple's consumer loyalty and robust cash flow. Apple has since become one of the most valuable parts of Berkshire's portfolio. During the financial crisis of 2008-2009, Buffett made a savvy move by investing $5 billion in preferred Bank of America shares, which came with a 6% annual dividend and the option to buy 700 million shares at a price of $7.14 each. This stake has multiplied in value as Bank of America's stock recovered and grew in the following years. In the midst of the 2008 financial crisis, Buffett offered a much-needed capital infusion to Goldman Sachs, investing $5 billion. This vote of confidence from Buffett is often credited with helping to stabilize the firm during a turbulent period, and the move paid off handsomely for Berkshire Hathaway. These investments showcase not just Buffett's ability to pick stocks, but also his strategic thinking, his understanding of market psychology, and his patience to hold on to and grow his investments over the long term. His decisions reflect a deep belief in the value investing philosophy, purchasing securities that appear underpriced by some form of fundamental analysis. Despite his enormous wealth, Buffett is famous for his frugality. He still lives in the same modest house in Omaha that he purchased in 1958 for $31,500. He's known for driving himself to work and for years drove a license plate that read "Thrifty." He also famously treats himself to a McDonald's breakfast, determined by the day's stock market, on his way to work, never spending more than $3.17. These examples provide a glimpse into Buffett's character and explain why he is more than just an investor. He's an icon who combines wit, wisdom, and an approachable persona to make the often opaque world of finance more accessible and understandable.